Welcome back to the US Stock Picker podcast. It is March 12th, 2026, and if you have been watching the industrial sector today, you probably noticed something massive on the radar. We are seeing a lot of green on the screen, but one name in particular is demanding our attention.
Oh, absolutely. You can't miss it. We are talking about Alcoa Corporation, ticker symbol AA. The stock didn't just move today, it launched. We're looking at an 8.24% gain in a single session. Volume is through the roof, and it is testing the upper bounds of its recent range. It's exciting, sure, but it also creates this intense psychological pressure for traders. You see a move like that, and the immediate instinct is, did I miss the boat? Or do I jump in right now before it goes higher?
Exactly. That is the classic dilemma. It feels like the train is leaving the station. But before we get into the buy or sell decision, let's strip this down. Why is this happening? Alcoa is a massive company, a legacy industrial player. Stocks like this don't usually move 8% in a day without a very good reason. What is the engine behind this move?
It's a perfect storm of three things: fundamentals, sentiment, and technicals. Let's start with the fundamentals because they are rock solid. Alcoa just released earnings that frankly crushed expectations. The market was looking for an earnings per share, or EPS, of around 92 cents. Alcoa delivered $1.26. That is a massive beat. It tells us they aren't just surviving, they are managing costs and pricing power significantly better than anyone anticipated.
That is a significant margin. But in this high-interest environment, earnings are one thing, but debt is usually the killer for these capital-intensive mining companies. How does their balance sheet look?
That might be the most impressive part of this entire report. Their balance sheet is, for lack of a better word, pristine. We are looking at a debt-to-equity ratio of 0.02.
That is effectively zero.
It's virtually zero. In an industry where you have massive overhead mining bauxite, refining alumina, smelting aluminum to be debt-free is a superpower. It means, while their competitors are worrying about refinancing loans or paying interest, Alcoa can focus entirely on growth and shareholder returns. It's a fortress balance sheet.
That creates a lot of safety. So, we have a great earnings beat and no debt. But you mentioned sentiment earlier. Who else is buying this? Is this just retail traders chasing a headline? Or is there big money involved?
It is definitely the smart money. Recent filings show Victory Capital Management increased their holdings by over 36%, and we're seeing new positions from firms like Focus Partners. When you see institutions loading up like that, it's a vote of confidence in the long-term trajectory. Plus, there's a narrative tailwind here regarding tariffs. The market views Alcoa as a winner in the current trade environment, which is adding fuel to the fire.
Okay, so the story sounds perfect. Great earnings, no debt, institutions are buying, and the stock is up 8% today. It sounds like a buy at any price. But I know you, and I know that is rarely the case. Let's look at the chart. We are trading around 66 size 36 stocks right now. Is this thing overheated?
And that is the million-dollar question. This is where we have to separate the company from the stock. The company is doing great. The stock, it is technically extended. If you look at the Relative Strength Index, or RSI, on the 4-hour chart, we are sitting at 63.7. On the weekly chart, the RSI is over 70, which is technically overbought.
So, for our listeners who might be newer to technical analysis, what does an RSI over 70 usually imply in this context?
Think of it like a rubber band. The stock price has stretched very far, very fast, away from its average. When that rubber band gets pulled too tight, which is what an RSI over 70 suggests, it usually needs to snap back or at least go slack for a bit before it can stretch again. The stock is currently hitting its head against a 52-week high of $68.40. Buying right here at $60.36 is chasing. You are buying at the top of the move.
So, despite the 8% pop and the great news, the near-term signal isn't buy.
Correct. The near-term signal, strictly for the next 1 to 5 days, is wait. The risk-to-reward ratio right here is poor. If you buy now, you're betting it smashes through the year high immediately without taking a breath. The data suggests a mean reversion, a pullback, is highly probable.
That makes sense. Nobody wants to buy the top. So, if we are waiting, what are we waiting for? What is the setup here for a swing trader?
The setup is actually beautiful if you have patience. We are looking at a swing trade horizon of 3 to 15 days. We want to see the stock cool off and retest the breakout level. The stock broke out from a consolidation zone around $6,100. Old resistance often becomes new support. So, we are stalking a pullback into the $61.50 to $62.50 range.
That is a significant drop from where we are today. You're asking for a $4 or $5 pullback.
Exactly. And that scares people. When it starts dropping, people think, oh no, the rally is over. But that's actually the healthy behavior we want. We want to buy the retest. If it holds that 61.50 Salz's level, that is your golden entry ticket.
And if we get that entry, what is the upside?
If we enter around 61.50 or 60 Talon, we are targeting a move back up to test that year high of 68.40. If it breaks through that, the extension target is 71 Tals to 72.100. That gives us a risk to reward ratio of about 2.5 to 1. You're risking a little to make a lot.
That sounds like a disciplined plan. Are there any upcoming events, catalysts, that could mess this up? Or perhaps fuel it?
There is one big circle on the calendar, March 17th. Alcoa is presenting at the JP Morgan Industrials Conference. These events can be binary. If management comes out and gives positive guidance, it could be the catalyst that pushes the stock through that $68.40 solid resistance. However, if they sound cautious about costs or energy prices, it could trigger a sell the news reaction.
Right. And we should mention the risks. Even with a debt-free company, things can go wrong.
Always. The biggest risk here is the cyclical nature of commodities. If the global economy slows down, aluminum demand drops, and price follows. Also, keep an eye on the $5,800 level. If the stock closes below 5,800s, the bullish thesis is broken. That's our line in the sand.
So, $58 is the get-out point.
Precisely. That's where you cut your losses. But as long as we stay above that, and specifically if we hold that $6,100 breakout zone, the trend is aggressively bullish. We have a golden cross on the chart. The 50-day moving average is above the 200-day. That is a classic long-term buy signal.
It is fascinating to see such a strong clash between the long-term bullishness and the short-term need for caution. It really highlights why you cannot just trade off headlines. You have to trade the chart.
That's the game. The headlines tell you what to watch. The chart tells you when to strike. Right now, the US STOCKPICKER podcast analysis is clear. The stock is a winner, but the timing requires patience. Don't let FOMO, fear of missing out, force you into a bad entry.
Well said. Let's bring this all together for our listeners. We have covered a lot of ground, from the EPS beat to the RSI levels. Let's crystallize this into an actionable plan. If you are listening and have your trading journal open, here is exactly what you need to be looking for regarding Alcoa.
Here is the bottom line.
First, news sentiment analysis. It is strongly positive. You have an earnings beat, massive institutional accumulation from Victory Capital, and favorable tariff wins. The market wants to own this stock.
Second, fundamental analysis. This is an A-grade setup. EPS grew nearly 15%, and the company is virtually debt-free with a 0.002 debt-to-equity ratio. It's a safe house in a volatile market.
Third, swing trade analysis. The trend is your friend here. The daily chart shows a powerful breakout on high volume. The signals are bullish, but the weekly RSI is overbought, meaning we need a breather before the next leg up.
Fourth, when to start investing. Do not buy today. Wait for the pullback. You want to see the price cool off and stabilize over the next few days.
Fifth, what price point to start investing? Set your limit orders in the 61.50 yas to 62.50 range. You are buying the retest of the breakout.
And finally, when to leave the market and mitigate risk. If the trade works, take profits at $68.40, the year high, and hold a runner for $7,200. However, if the trade fails, you must exit if the price closes below 5800. That protects your capital.
A clear, precise roadmap for trading Alcoa. Patience is going to be the key to unlocking this profit. Thank you for that deep dive. As always, the market gives opportunities to those who wait for the right pitch. We will be tracking AA closely over the next week to see if we get that pullback entry. Thanks for listening to the US Stock Picker podcast.
The information provided here and on this channel is for general informational and for education purposes only. It does not constitute investment advice, financial advice, trading advice, or any other sort of advice. We make no recommendations regarding investment decisions based on this information. You are solely responsible for your investments. Please conduct your own research and consult qualified financial advisors before any investing.
Video title, Alcoa pops 8%. Growth stock, picks an upside. Potential stocks. Analysis, stocks, stow trade. Podcast style.